Hey everybody, I'm Peter Harris. I'm a venture capitalist with 14 years of experience and probably about 60 to 70 deals under my belt, plus thousands of other interactions with entrepreneurs. Today we're gonna do a react on Shark Tank and hear the pitch from Knife 8. So let's dive into it.
Hi Sharks, my name is Mark.
Hi, my name is Michael. We started a knife sharpening service by mail, Knife 8. A super simple idea, disrupting an old trade by e-com. For the right shark, we're offering the opportunity to invest $400,000 for 15% of our company.
Ooh, that's a lot of knives.
A knife is something most Americans touch every day, yet knife sharpening, a beautiful angel.
All right, so they are saying their business today is worth $2.7 million. All right, so some things that I like about this business right off the bat is, it seems like it's a fairly scalable business, right? You just open up the app, you type in your information, they send you an envelope, you drop it in, you send it off. Frankly, they could also add a subscription side of the business, which I think would be really interesting. Subscription is like holy grail for consumer products businesses because you just get recurring revenue every single month and your lifetime value of your customer is super high. The flip side is this is not scalable from the perspective of like they got to actually get the knives and they got to sharpen them and they got to send them back. So they've got to have like a big facility where they're churning through these. Now, the other thing is that I'm worrying about right off the bat is like, what if your customer doesn't have a knife that's actually worth sharpening, right? Most knives are not. And actually, they should probably just be thrown away. And so it's not really worth it. And so that's my question is like, how many customers actually have knives that are worth resharpening and worth paying for this service versus not? Which also means like they got to charge a decent amount for this service. So anyways, I'm curious how they're going to answer that. And I'm also curious what the sharks dive in on.
What we wanted to illustrate here is everybody knows
this packaging must be pretty expensive. So like that's another thing to be thinking about is like from a cost perspective.
You still involved with Happy Sauce?
Yes, I am, but I'm not operational anymore. I'm on the board and own them. Yep.
But how did you come up with the knife idea itself?
So I love this. He's the founder's like been there, done that. He's built a business with Happy Socks before, which is a good business, well-known, successful, so.
And simplify it, get an envelope, get the knives in, fixed price, just quick turnaround.
And how much do you charge? So go walk us through.
We would sharpen an average at $10 a knife for everything included. Minimum package 4 knives.
Does it matter the size? Like there's serrated, there's the bread knife,
But that's what we simplified. The traditional knife sharpers in a farmer's market, they'll go by inch and they charge different. We made it very simple. It's per blade.
Doesn't matter the size.
It doesn't matter the size.
Knife to large knife.
Exactly, and even scissors. That's kitchen scissors goes in there, hunting knives,
Oh, you do
fishing
scissors
knives.
too?
Guys, I'm a little confused. Something's bugging me.
Okay.
You, Michael, are clearly a successful.
All right. So let's pause just for a second to go through this. So they're charging $10 per knife, fully shipped, and sharpened and everything, and with a 4 knife minimum, which means that each order is going to be $40. They've got to be able to acquire the customer for a lot less than that, right? And then they got to hope that the customer's going to come back, like, I don't know, like once a year, a couple times a year. I would be really curious to know like how much it costs for them to acquire. It would not surprise me knowing like other consumer products related businesses, if this is costing them somewhere in the range of like $30 to $100 per customer, which means that they're probably losing money on and they're definitely losing money on the first time that they sell this product. And then they're just praying and hoping that the customer's going to come back.
What are your sales?
So we're on 120 on this side of the year.
120,000?
Yeah.
How'd you get those sales?
So it really, what we've done is mainly experimentation. We're now on the 4th iteration of our website, so it's sort of a proof of concept sales
You
we're
used
currently doing.
Instagram ads? Have you
We use it's really Facebook, Instagram, Google.
How much did you do last month?
37,000.
37,000.
All right, listen, I'm going to give you an offer. I like the concept.
All right, so let's just pause for a second before we get into the offers. So they're doing $120,000 in revenue so far. They've done 37,000, which let's say that like they didn't grow revenue anymore beyond that 37 and they just had it flat throughout the rest of the year. That puts them at a $440,000 run rate for the year. So if we go back to our valuation of the $2.67 million, that implies roughly a 6x value. So value of the company relative to revenue. I'll tell you right now, that's pretty rich. Most companies in the consumer product space are somewhere in the range of 1 to 3x. Now, they're probably giving themselves some valuation bump from the perspective of the founders, kind of been there, done that before, selling consumer products. You know, they're new and they don't want to give up the whole company, right? And you also want to start high, right? Because you know that the sharks are going to start beating them down and coming down. So let's see what the sharks offers actually come in at.
Concept, you're fresh, you're unique, you're different. You've already got the packaging down. It's really quite good. I think you are smart in needing to know what the market is here. There's nobody who knows better, I feel, than...
I think I do know somebody who knows better.
No, there isn't anybody that knows
Yeah,
better.
there is.
I know because I've sold
She
over
believes that, so
1,000
listen.
products over 20 years to predominantly the U.S. market. But I'm
gonna
gonna,
make an
it's a
offer?
risky offer, okay? I mean, I have no idea how this is gonna go. I'm just gonna give you a flyer, you can take it or leave it.
She has no idea how it's going to go because, let's be honest, like $137,000 a month is pretty low.
I'm gonna give you 200 in cash. I'm gonna give you 200 as a line of credit, and I want 20%.
All right, so let's talk about her offer. So first of all, they went in asking for $400,000 of equity, right, of cash in the business, and she's asking for 20% really for $200,000, and then she's going to do a loan, this line of credit, for the other $200,000. Now, what is a line of credit? Just for those that don't know, line of credit is a loan, but it's designed to be something that you draw on as you need it and then pay it off in relatively short order. So it's unlikely that she's saying, hey, here's $200,000, go spend it and then pay me back in 10 years. More likely what's happening is she's like, here's a line of credit, you can draw on the $200,000, but I'm going to charge interest for every dollar that's out. And so they're going to be, and it's probably going to be high interest because that's the way most lines of credit work. So they're going to be incentivized to pay it off like every month. It's like a credit card, really. So she's willing to give them $200,000 for 20% of the company, meaning that this company is worth $1 million. And if we run our earlier math, that values this thing at 2.25x enterprise value to revenue, which I think is a little bit more in line. Let's see what they say.
I'll get behind this product because I like it a lot. Here's
All
my
right, so in
offer.
this
I'll give you
case, you've got two offers. Well, let's see if there are any more.
$400,000 for 20%. I think that's a great idea because you get Chef Wonderful.
Guys, 2 is always better than 1. So when you get the queen of retail, and then you put that together, the king of branding, I mean, that's quite the pairing. We too would like to give you 400, but 20% of the company. You get 2 sharks instead of 1 self-appointed Chef Wonderful. My brands get into more Americans' hands than anybody else in the panel.
Wait. I think you're being very aggressive in what you're asking, but I like greedy people. Okay, so Kevin and I, we're gonna offer you $500,000 for...
20%. We're upping the ante. If they want to compete, go ahead.
It's kinda
But
like
we're the
an
right
auction.
team for you. There's no question about it.
Let's look at the valuations that they've offered so far. So Ken and Barbara are offering $500K for 20%. So that values the business at $2.5 million, which is double, right, what the other offer was that they received. Although she also sounds like she's upping her offer as well because she's going in with the other guy. So, and that pushes their offer up to $2 million. So right now on the table, they have an offer for $2 million from Two Sharks with, some advantages, and $2.5 million valuation from the other Two Sharks with arguably slightly different advantages. Except for one, they're actually going to get more capital, which that could be a trade-off. The entrepreneur may look at this and say, hey, more money is great. I want more money to help run the business. Or they could look at it and say, I don't want to raise too much because I don't want to give up as much of my company. Now, in this case, they're giving up 20% either way, so they're just getting more money for the amount of the company that they're giving up. So honestly, I think these are both like pretty attractive deals. It's hard for me to assess like who's going to do a better job, Kevin and Barbara or the other two. My guess is that it's probably about even.
We want to drive fast. We have the car. We know how to scale it. We know what we're doing. And we need somebody to say, take that route. It's faster. Take that route. It's faster.
what I
We've
done
done
it.
it.
Wait,
We've
what do
done
I
it.
always
Let's
say?
go
What
build
are my
something.
words?
Yeah, we all want to build
You guys
something.
want to make this a DTC business. This is an equity model. You're going to have to raise more cash. Getting us on board means that the biggest venture capital Silicon Valley
Oh,
are going to pay
please, you call
ungodly
up anybody,
valuations.
they all see you.
And we're going to take this
The
to
biggest
that
venture
promised
capitalists,
land.
you
We
call
have
them
three in
up,
our
they're all
portfolio.
out.
alone.
Okay, so one of the things I just want to touch on is, like, why is he getting like so many offers, right? If you've watched a lot of Shark Tank, like I have, like sometimes like businesses like this, they walk in and they're like, really, like you're only doing like 37,000, like whatever. Like you should be asking yourself, why are all the sharks jumping all over this? And I'll tell you, I think it's because of him, primarily him. Like he has already built a very successful business, and they're basically saying, hey, the fact that he's so involved massively de-risks this opportunity for us, and he can run it and we can just be supportive and we don't have to hold his hand. And they can see how like there's real value creation there, and he understands how to work retail and how to do D2C and all of that stuff. And I think that's why they're all competing for this deal.
You're going to make a call here, Michael.
We're making a call.
Just have a quick chat.
You have 30 seconds.
Thank you.
Damn, you guys grovel enough?
Well, why don't you make an offer?
Yeah, this is a big deal.
Beggar.
So I just want to add that too, that I think it's interesting that he then turned the tables on them and is pushing them to like, what kind of value are you going to add? And I think this is something that smart entrepreneurs do, is oftentimes like VCs do a lot of the due diligence, but I think really smart entrepreneurs are pushing back and they're doing their due diligence on the VCs to find the right partner and the ones that are really going to roll up their sleeves and engage when making a decision.
You want to know about passion, right? Well, I'm not sitting waiting. I want this deal.
Yeah.
I'm here. I'm with you.
Okay, so for us, we would really want you to move up to 500 for 20% because it would feel better for us walking out of here knowing that we got same as the other guys.
Why not? I can't even hear what's going on now.
And really,
Okay, so this type of thing totally happens in venture. Like everybody gets excited about a deal and then they start fighting over it and they compete.
This thing.
You guys know what
Plus,
brand
we're offering
building's
you an
about.
extra $100,000.
we came here with the target of Lori and Ronan, but I want them to go up to 500 because then me and Mark will walk out of here.
But wait.
I'm
Done.
taking a hand
No,
now.
wait. Why not? Wait.
Done.
It's closing.
But
It's
wait,
closing.
close.
It
Let me-
closed.
It's
Let me
closed.
back.
It's closed. It's closed. It's closed. It's closed.
Okay, so I want to talk just 2 seconds about the psychology of what's going on here, right? So they looked at it, they said, hey, he's a great entrepreneur, we want to back him. That then started to create like this FOMO, this fear of missing out, right? And this competition. This sort of thing happens all the time in venture where the FOMO starts to heat up and VCs start competing on terms and they like chase them down. Like there's a story of how some partners at Sequoia made these Lego sets because they knew that the founder really liked Legos and they went and gave them to her, right? As a way to convince her to let them invest in her company. So like this type of stuff happens. It's not super common, right? But when it does, it's super fascinating to see. Anyways, I hope you enjoyed watching this with me. Super interesting because I think at the end of the day, like this is an okay business with a really great founder. And that's why it was such an exciting pitch to watch. Check out my React video where the entrepreneur pitches an app that helps people cheat on their spouse.